Welcome to the Contrarian, everybody. Today I'll be talking about the very significant news this last week regarding the semiconductor stocks. Of course, Nvidia had their earnings report that came out better than what Wall Street was anticipating. They also threw in some artificial intelligence language into their earnings report that got Wall Street very excited. And on the back of that, the semiconductor ETFs and obviously Nvidia, AMD, Micron, etc., all these stocks are breaking out to multi-year highs. And, on the back of this, the big news is that the NASDAQ and the S&P 500 even, which are, weighted in semiconductors as well as technology, these indices are beginning to rally as well. And so it might be the case where we could be seeing a short squeeze type of rally just beginning to start in the general stock market, not even just the semiconductors, but the general stock market. And a lot of this does tend to play in with what David Hunter, who I've been fortunate enough to have on a couple of times already, has been talking about for the past couple of years. He's been very early with regards to his melt-up thesis, but what he has talked about with regards to the fear of missing out, traders getting back into the market, investors getting back in, not wanting to miss out, that will fuel a upcoming rally in the stock market. So before I kind of say that that's officially what I'm anticipating in the stock market, I just want to take a look at these charts out there, because I do think that it does tend to speak for itself, regardless of what your view is, whether you think we're, maybe peaking out here. This is just a kind of last minute rally in these tech and semiconductor stocks before the stock market rolls over again, or you do think that this could be a sizable rally coming up. I do think it's good to just examine technicals and more so sentiment, where the investor sentiment is likely going to go in the coming months. So all that being said, looking at, for example, the VanEck semiconductor ETF, this is at a maybe 2-year high, off maybe about 80%, almost 100% actually, from the lows set late last year. So semiconductors have really rallied, especially in the last week, obviously with Nvidia and all of the other semiconductor stocks rallying as well. We can see that it is almost breaking out to an all-time high, but we will have to see if this momentum does stay in the semiconductor ETFs. It probably will go, undergo a little bit of correction here and there, but it could continue. And a lot of this is due to short squeezes being undergone on all of these stocks. There was some short interest, which of course was covered as a result of the earnings report that Nvidia put out. And looking at the S&P 500, I do think this is very telling, because the S&P was in a very tight range for the past couple of months, and it does appear to be almost breaking out to the upside of that. It's a little less clear with the S&P 500. Now the NASDAQ is a lot more clear, in my opinion, in terms of breaking out to the upside. And this is simply because the NASDAQ is more heavily weighted in semiconductors, technology, of course. And so the NASDAQ is going to play into a lot more of the semiconductor rallies that have undergone in the last week as well. But, and of course, Nvidia at an all-time high. A lot of other semiconductor stocks as well are at all-time highs now. So yeah, a lot of this could be kind of short-term momentum that does fade away a little bit, just as a result of just the short squeezes that have gone on and how that does wear off eventually. But I think the more important thing to examine is investor sentiment, where investor sentiment is going. And of course, in 2021, even though the economy was completely shut down and the fundamentals were terrible, stocks continued to rally through that entire year, not because of solid fundamentals. It was because of Fed liquidity, of course, being pumped into the system, and then also investor sentiment continuing to build on itself. Investors just continuing to put more and more capital into the stock market, into the bond market as well, but mainly the stock market back then. And so it is very possible to have rallies occur that are not based off of fundamentals whatsoever, that are based off of sentiment, Fed liquidity, and they do not last forever, but it is important to realize that rallies like that do take place. And so it is very possible that something like what happened in 2021 does happen again, where investors don't want to miss out. They, underwent last year, which was difficult, probably about a 30% haircut on average for investors across the board. So they don't want to miss out on what they think is kind of the next big upcoming rally. And so if this momentum continues to go in the general stock market, the indices, maybe the NASDAQ specifically, and then spilling into the Dow and the S&P and other market indices, if that continues to build on itself and earnings reports continue to come out maybe better than expected, whatever that means, then it's very possible that you continue to have a stock market rally, kind of like what happened during 2021. Of course, this would not be a sustainable rally, kind of like what David Hunter has mentioned. It would not be a sustainable rally. It's not the beginning of the next long-term cyclical bull market. It's kind of the last dying breath of a cyclical bull market. But all that being said, this could be kind of the beginning of what David Hunter has been saying. Now, I'm not saying that this is for certain that I'm, saying you should act on this. I'm more saying that the kind of cards are lining up well for investor sentiment, especially to begin to grow on itself. And maybe it starts out as a short covering, short squeeze type of momentum, and then it builds more into fear of missing out, investors piling in, not wanting to miss out on what they see as maybe the next big rally. So it is up to you how you want to play into this if you do, but I will actually be talking with David in about a week, so I'll be getting to ask him some questions related to obviously what we're seeing right now in the semiconductor and the technology stocks in particular. But all that being said, let me know what you think about this down in the comments section below. I hope to see all of you again at some point. I hope all of you have a great day.